Agritech startup DeHaat has actually reported a 40% increase in their operating revenue. They've cut their losses as well. We've got Shashank Kumar, who's the co-founder and CEO, joining us. Thanks so much for taking time out. So let's discuss your financials. Your losses have halved, but it's still remaining above 1,000 crore rupees. What's the time plan to actually break even, and what is really going to lead to this?
So, hey, Avanne, no, thanks for having me. And first of all, thank you for asking this question. So, there is a slight correction that so it's not the actual loss, right? What I think number of times we have tried to educate the people. So, as per the Companies Act, there is a rule called IND-AS, which talks about CCPS adjustment when the size of the company goes beyond 1,000 crore of annual business. So, long story short, our operating loss is not the number what you see in the balance sheet, right? I mean, the larger number of losses are attributed and related to that CCPS adjustment, right? So whenever you raise the capital, your share price goes up, so that CCPS adjustment basically needs to be taken in the balance sheet in form of liability. But the factual and the more important fact to know is that if I talk about only the operating loss in FY23, this was 360 crore only. And in FY24, this came down to 200 crore. While the overall business grew from 1,900 crore to 2,700 crore in FY24. But more importantly, I think the way how we closed Q4 of FY24, I think that was phenomenal because by Q4 and the way how we ending the financial year, our on month basis, our EBITDA burn, it came down to just 2.5–3%. And on the success of that in the current financial year in FY25, not just we are talking about growing from 2,700 crore to almost 4,000 crore, but more importantly, we are talking about full year profitability at an EBITDA level, not just the break even or just above the break even. In the current quarter, Q1, again, month on month, the EBITDA burn is close to 2.5. But again, in the subsequent quarter, it needs to get better. But answer to your question, which is the break even status, is that FY25 full year break even is what we are aiming for, not just a month on month during the subsequent part of the year.
Sure, and the company has also attributed your continued top line growth to the operating leverage. Can you elaborate a little bit more?
Yeah, sure. So as you already know that it's a full stack platform, and to the Indian farmers, currently we are working with 2.5 million farmers through our 13,500 DeHaat centers across 110 districts of India. And when we say full stack, it includes all the agriculture value chain services, right? From giving them agricultural inputs to sourcing the produce from them, whether it's perishable or non-perishable as a crop. And then at the same time, I think the financial services, something what we have already started a year and a half ago. So because of this bundle of services, we always have an opportunity to transact more and more with the existing network. So yes, you rightly said that that year-on-year growth is more than 40–50%, and that is going to be continued in the current financial year as well. But the beauty is that in last year and a half or two, new network we haven't added. So whatever growth is visible, it all came from the existing network. And exactly as you rightly asked, it's all about the operating leverage. And that is, again, another profitability driver. I mean, another driver of the profitability, because from the existing network, your business is growing, your cost is flat. And at the same time, again, out of all the businesses, since you're growing, sustainably, a lot of, high margin opportunities basically you are carving out. For example, within the agri input, a lot of biologicals, exclusive products, the private label categories now we have launched. Similarly, on the output side, now we have started direct export. When we are currently exporting a lot of fresh produce, whether it's grapes or banana, and a lot of vegetables to more than 30 countries. So number of high margin businesses basically are the outcome as a success of volume. But yes, I think the simple reasons are twofold. One, the way how we have designed and the way how we have developed all these bundle and entire 360-degree agriculture value chain services for the existing network or the farmers in a crop agnostic manner. So whether it's a grape growing area or it's a corn growing area, to DeHaat, it doesn't matter. We see a same, business opportunity, and that too, not just for 1 or 2 months, but around the year, sometimes selling input to them, sometimes buying output from them. So one is the services. And the two is that like the way how in last 3-4 years, we have expanded our geographical network all the way from Bihar to now MP and Rajasthan and Maharashtra. So imagine that out of 110 districts, which are the current footprints, we still see enough headroom for another, I would say, 70-80% growth. And that's the reason why at this moment, as we speak, we are again focused to the existing geographies, which will give us opportunity to grow from 2,700 crore last year to 4,000 crore this year, and maybe like next year in the range of 5,500 or so. But at the same time, maybe I think at some point of time we may require network addition or geographical addition as well to ensure the future growth.
And what is the ESOP buyback plan? Can you give us more details?
Oh, no, sure. So yes, I think this is the very first time we conceptualized this and we executed this. Considering it's been almost 4 years, we launched ESOP scheme for our people, and considering the company has a clear path to profitability. We have enough cash reserves of more than $55-60 million. I already told you the full year profitability plans, and so we thought that probably I think it's a good time to reward our people the kind of effort they have put. And in last 3-4 years, I think since we given this ESOP scheme or as an offer to our people, the vesting schedule has been completed, and then when people have evolved a lot within the organization. So I think connecting all these facts and the current trajectory, we felt that probably it's a good time to initiate this. So roughly as on date, I think close to 200 people they have got the ESOP scheme from the enterprise, and then all these people are asked are given an option to exercise and to opt for this liquidation event. This is being bought by the company itself, right? So it's not like that that any other investor or any other liquidation event is happening. It's like just like company itself is buying. Why? Because we feel very strong financial stability at this moment. And the another reason was that just to experience as an organization as well, because if everything goes well towards later half of the financial year, I think so we are planning a bigger event. So also I think a little bit of head start or preparation to that bigger event. I think we wanted to experience this overall exercise and the process. More importantly, we are very happy, right? Because ultimately, while working with all these farmers, while managing such a large operation, eventually there is a high degree of people dependency as well, and it's them basically how and why we have been growing. So it's very satisfying that that we could do that. But even on the ESOP buyback trajectory, this was just a first step.
So currently, how many states is it that you're operating in? How are you planning to grow your network?
Well, so at this moment, we have our footprints in 12 states. It's mostly in all the eastern part of India, Bihar, UP, Jharkhand, West Bengal, Odisha. But then after that, we started replicating to central, northern, and western part of states, so such as Rajasthan, MP, Maharashtra, Chhattisgarh, Gujarat. So at this moment, we have our operations in 12 states. More importantly, you can understand that having such a strong belief on building your last mile supply chain up to the household, up to the farmer's household level, more than 12 states, I think we take this pride while saying that that this within these 12 states, we have already built our supply chain to almost 120,000 villages of India, which are roughly 20% of the total rural India. And then the common or the same supply chain is being used for all type of agri value chain interventions, whether it's input to farmers or output from farmers. And then a lot of investment at a district level in form of infra, right? Because when you are aggregating farm produce, so imagine every day we are aggregating almost 7,000 ton of produce. And then basically again to minimize the loss, food losses and the post-harvest loss, which is one of the larger national problems. So then the kind of investment basically again it was needed at a district level to ensure right post-harvest intervention when you source all these produce from farmers, and then when you are selling to UK and European market along with other domestic market as well. The similar kind of investment again to manage thousands of SKUs on the agri input side, so that when farmers they are ordering any seed or any biopesticide, it gets delivered in less than 24 hours. So more than 12 states, I think whenever we talk about the outreach and the network, it's almost 110 114 districts and 120,000 villages at this moment, Avanne.
You've also launched your own consumer brand. How is that doing for you?
Oh, that's at a very nascent stage. We are very emotional and excited about it, because our larger business is B2B, and we have a very strong thesis around B2B. While working with large institutions such as Unilever or Cargill or ITC or Adani, and then although global retailers, this consumer pack is nothing. I think it's basically very very, I would say, new initiative, because within our 2.5 million farmers, we found that many farmers they have already upgraded because of our crop advisory services, because of our agri input services, and upgraded towards the fact that when they started growing low residual or low pesticide produce. So I think just to reward them and their effort, and at the same time, I think connecting those farmers directly to consumers, I think we launched this consumer pack called DeHaat Honest Farm, which is nothing, which is just like again sourcing from those farmers who are growing absolutely zero pesticide range of staples and pulses and spices. And then at the same time, I think it's more about sharing their stories to the consumers who are more cautious about the health, so that basically I think they can get access to the healthy range of farm produce, and at the same time they can get to know more interesting facts about the farmers and the perspectives of farming by the farmer's family. So it's just like 8-9 months, but the good part is that it's growing very well, considering it got listed across all the modern trade and the quick commerce platforms. Even in the general trade, I think all the premium stores, in fact, they are giving very very good response. In such a short span of time of 9 months, again it has already reached to almost 200 cities, almost across 3,000 stores. But yes, at the same time, again, we want to grow it organically, and we want to see that what kind of response we get in the coming time.
And how do you plan to scale up from here? What's the game plan over the next 3 to 5 years?
Sure. So I'll take it in two ways. So the way how I mentioned that at this point of time, we could expand to 110 districts across 12 states, right? So similar to that, the long-term vision is to replicate the same model to 300 agricultural districts of India. And as you already know that the model is pretty crop agnostic and service agnostic, right? So that whichever crop farmer is growing, how they can get access to everything related to agriculture under one roof in an accessible as well as affordable manner. So across all these 300 districts, basically, again, we want to replicate the model in a similar way. And we believe that, this 2.5 million farmers, basically, we want to take it to 10 million farmers over next few years, helping those farmers to earn more, to ensure a better livelihood for their family. And so that's one fold in form of network. Two, in terms of business opportunity, we see a fairly large opportunity. As as you already know that we started this business in 2012, so it's been already 12-13 years. But what always motivated us to stay here is a very very large opportunity, right? Considering 14 to 15% our national GDP comes from this space, and being a category leader, being largest in agritech space, we are getting a lot of competitive advantage to continue with our growth trajectory. So again, on the financial side, I think we see that this 4,000 crore in the current financial year, in the next 3 to 4 years, clearly crossing to 10,000 crore business in a highly profitable manner, considering this year itself we are going to break even. So on the network side, 10 million farmers, 300 states, 300 districts across entire India. Down south, we don't have our presence. We'll have to replicate. We'll have to again expand towards there as well. And on the financial side, while we have grown a lot, but still we see enough headroom, for next 2.5, 3x growth from here onwards in next 3 to 4 years.
Okay, good to have you on board. Thanks so much for taking time out and joining in.